S&P 500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hello and welcome to another TrendSpider Technical Analysis Series video. In this video, we're going to be discussing the concept of supply and demand zones with a focus on tools and techniques that you can utilize to make finding and trading these zones as easy as can be. Let's jump into it. The idea behind supply and demand is perhaps the most important concept to understand as a trader because these two forces are simply what makes a market. An abundance of supply will cause the price to fall, while demand pushes it higher. As this battle for control rages on, there are signature patterns that occur over and over again, and if you can recognize these patterns, you can fast-track your understanding of the markets. Let's take a look at a few of those patterns that you need to know. First up, order blocks. An order block is found right before a pivot occurs and is visualized as a zone around the last opposite-colored candle before the pivot. If the price is in an uptrend and then reverses, we're looking for the last green candle before the pivot. If the price is in a downtrend, the last red candle. Gauging the strength of the move away from the pivot is also important. A weak push from the pivot might result in the price falling back into the order block, while a more powerful push might result in just a quick test of its boundaries before a continuation of the trend. Order blocks work best as tradable zones when a break in structure has also occurred. A break in structure simply means a change of trend. If the price was previously in an uptrend and a powerful downward move leads to a break in structure, meaning a lower low is made, traders will be looking to enter a short position when the order block is tested from below. The equal and opposite is true if the price was previously in a downtrend. If the price reverses to the upside and a break in structure occurs, then traders will be looking to take a long position on the retest of the order block from above. Order blocks are great areas to take trades because the risk-off level is so close to the trade entry. The risk-off level is the spot at which a trader would set a stop loss, and generally, it's suggested to set stops just above the top or below the bottom of the order block, or just above or below the high or low of the pivot. On TrendSpider, you can utilize the order blocks indicator to automatically identify and draw out these zones for you. The sensitivity value can be adjusted up to see more order blocks or down to see less. The mitigation value determines what price action is necessary to clear the order block. Note also that order blocks exist both above and below the current price, so it is imperative to understand the direction of the prevailing trend. If the price is in an uptrend, taking a long position on a pullback to a lower order block is more likely to result in a successful trade than a short position at an order block above price. It's also wise to look for virgin or untested order blocks, as the likelihood of a reaction is higher if the order block has not yet been tested. Many have heard of the ICT trading methodology, and few concepts within it are more popular than the idea of a fair value gap. Let's take a look at that pattern next. Fair value gaps are defined as instances in which there are inefficiencies or imbalances in the market and sometimes appear shortly after the formation of an order block. They're created within a 3-candle sequence and are commonly visualized on the chart as a large candle whose neighboring candles' upper and lower wicks do not fully overlap the large candle. The area in between the wicks is considered to be the fair value gap. Much like the order blocks we just discussed, after a fair value gap is formed, it's not uncommon for the price to retest it at some point. This is because fair value gaps are created from powerful directional moves in price that often leave some resting orders unfilled. To clear those orders and remove the imbalance, the price must return to the fair value gap. Because of their similarities, fair value gaps and order blocks can be traded in the exact same way. Traders should be mindful of the strength of the initial move, as well as monitor for a break in structure. If the move is powerful and a break in structure occurs, the likelihood of the fair value gap acting as support or resistance on a retest is much higher. Utilizing TrendSpider's fair value gap indicator, traders can easily identify these important areas on the chart with just a quick prompt in the assistant. To fine-tune the indicator to your particular requirements, try adjusting the gap factor setting. The gap factor represents the size of the fair value gap, so a higher value will result in fewer fair value gaps being drawn, whereas a lower value will result in more of them. Now that you understand how order blocks and fair value gaps work, you might be excited to start implementing them into your daily trading routine. Well, TrendSpider's got just the tool to help with that. It's our suite of gap proximity indicators. Let's take a look at them. With these new proximity indicators, you can now utilize fair value gaps and order blocks in your scans, alerts, and strategies. The proximity indicators for fair value gaps and order blocks work the exact same way, so I'll briefly explain their components using the fair value gap version. There are two key items here, the white line and the zero line. The white line tells us the distance to the closest fair value gap. If it's above the zero line, then the fair value gap is below the price. If it's below the zero line, the fair value gap is above the price. When the price arrives at a gap, the white line returns to the zero line. Knowing these basics, we can now put this indicator to use across the platform. For example, let's say you'd like to scan for a scenario where the current price is testing a fair value gap from below. To find these setups, simply type in FVG in your assistant and then select the FVG Prox Fill from Below option. The scanner will immediately load and begin searching the market for these conditions. Scripts like this one can also be used to create alerts on your favorite tickers or even strategy test fair value gap or order block trade setups. So there you have it, some basics on supply and demand zones and some actionable strategies that you can begin to implement today. I hope you found this video helpful. As always, happy trading, and we'll catch you next time.